Hi, welcome back. Sub the 10,600 mark on the Nifty. The Sensex is down 850 points as we speak. The mid-cap index down over 450 points, and the Nifty bank seeing a cut of about 500 points now. So let's get in some experts to try and tell us actually what to make of this fall and what do investors do at this point. Ashish Somaiya, the CEO of Motilal Oswal AMC, joins in. Ashish, hi, good afternoon. Good to speak with you. What's the sense you're getting first from the retail front? I mean, some dealing room chatter indicated that perhaps September could still see inflows and, even to the tune of about 6,000 odd crores on a net level. Are you seeing any sort of redemption pressure barring that few days that we saw of the Island FS impact? What's the overall sense? Are retail investors throwing in the towel? Are they here, continuing the faith?
There are definitely concerns on the margins. I can't say that there are no concerns. You can see that the flows are kind of, they've tapered off from the highs. I mean, we used to see 20,000 crore net flow. But on your question on September, my estimate is more like 8,000 crore net flow. I mean, the flow will still be positive, but with a lower magnitude.
So we'll get the AMFI numbers shortly, but what is your assessment, Ashish?
Yeah, my estimate is about 8,000 crore net flow positive.
Which is still not bad, which is around the previous month's number, right?
Yes, it's, I mean, maybe a couple of thousands lower than previous, because in the previous months we had more like 10,000 crore kind of net flow. What I'm hearing from my peers and my colleagues in the industry, we are estimating about 8,000 crore net flow.
But the point is, this is for last month. We're already into October, and October has begun the way it has, right? So this would.
So I have not seen anything. I have not seen anything out of character in the first 2 days. We just had 1st October and 3rd October. So I haven't seen anything out of character in the first 2 days. Too early to make any guesswork. My sense is that this kind of market behavior only, it doesn't cause redemptions. It causes a lot of people who are on the sidelines, or people who are usually investing on a month-on-month basis, or people who are coming in new. It definitely gives them food for thought and gives them some reason to kind of hold back or recalibrate their thought process. But I don't expect that in this kind of scenario we would see higher redemptions, really, if you ask me.
Fair enough. Ashish, what is the internal view? I'm asking for sort of the view on the market itself. I mean, what do you soak in at Motilal Oswal? What's the view really? Is the outlook suddenly become very hazy? Because, when the market gives you a pullback, if one is confident about the future, I mean, it should be treated as an occasion of joy to buy and not doom and gloom, right? But along with market declines comes uncertainty and whether how low this will go and all of that. I mean, we've seen that. So what is the view at Motilal really?
Our sense is that this is right now, it's a sign of panic, or it is a kind of, indiscriminate selling. When a whole index falls, like today, for example, any index you see is down 2.5%, irrespective of number of stocks, the cap, nothing matters. If you see, there were certain days last week where, the whole Nifty small cap was down 5%. There were days when it was down 3%. So if you ask me, this is a sign of panic, this is indiscriminate. I don't see too much of panic with the mutual fund investors or the people that we deal with. That reflects in the net flow numbers. But if you see broader in the broad market, my sense is this is absolutely indiscriminate, and I don't think fundamental sells can be this kind of indiscriminate in nature. I'm looking forward to the result season, because I think that will help us segregate what's good and what's not good, and that will give some kind of anchoring to the concerns that people seem to be having. I mean, if you see, there are certain sectors, certain segments where a bit of disappointment is causing some 30-40% of the market cap to get wiped out. Now, yes, you can focus on the bad news, no doubt about it, there are certain bad news. But is the bad news amply demonstrated or amply manifested in what is happening, or is it getting overdone? So my sense is we are getting close to being overdone right now.
Okay. Ashish, one more question actually on behalf of mutual fund investors. What are the kind of funds that are actually seeing the most traction in these times? I mean, is it like the balanced funds? What's the kind of reception that debt is seeing now? Could you give us any insights, into the latest trends?
No, so you're right in what you mentioned, that this whole scare on interest rates and credit quality of resulting from ILFS, and hence the perception of credit quality and interest margins at some of the NBFCs. So clearly that has resulted in a slowdown as far as liquid funds, ultra short-term funds, or the larger fixed income space is concerned. So that has taken a knock for sure, and I think that is reported as well today in some media. Apart from that, if you really ask me, as far as balance funds are concerned or equity funds are concerned, there are no clear trends out there. If I break up these 8,000, 10,000 numbers that we are seeing, what you should keep in mind is that 7,500, 7,600 is the inflow because of way of SIPs. It's not that people who put in SIPs, they never redeem. I think when there are some people who stop their SIPs, there are some people who withdraw the corpus that they had built also. But generally speaking, that SIP flow is stable. The other trend is that NFOs, new funds being launched, they are collecting some amount of money. So to give you a flavor, my estimate is that last month out of 10,000 crores, some 5,500 crore of net flow was on account of new funds being launched. So where is the negative? I mean, people who have invested for the last 2-3 years and made some money, they seem to be actually redeeming. Because what happens, you invested $100 3 years back, the 100 at a point in time was say 200 at a 25 rate compounding, and now the 200 is down to about 160. So then people think that, okay, let me take some money off the table because at 200 I didn't act, even at 160 let me do something. So what I read in the data is that people who have made money, invested 2-3 years back, they are the ones who are thinking that, okay, now my profit is actually declining very fast, so let me take some money off the table. When it was showing a greater value, maybe I was greedy, let me not continue to be greedy. So my reading is that people who have invested in the past and made some money, they are trying to take money off the table because of the concerns that are showing up. But typical SIP investors or people who are investing every month, I don't think they are showing any let up.
Fair enough. We'll leave it there. Ashish, appreciate your taking out the time today for us, and thanks for coming in. And we hope to sort of speak with you once we have that number, the formal official numbers from AMFI in terms of flows, not just into equity but debt, liquid funds, etc. for the month of September. By the way, the market, I think, is at the day's low. So we're down 2.6%, 281 points. We're at 10,576. And the low today is 10,570. So just 5-6 points off the lows is what we have on the Nifty. And look at the dollar rupee, which is at 73.66. So that also seems to be seeing some renewed, the rupee seems to be seeing some renewed pressure. Maybe you could, so the dollar is the interest in the dollar. One can safely say there's no interest in buying the rupee, at least. We take a very quick break here. We come back. We get you more on markets, stock-specific action, etc. on the other side.